more than 10 years ago, 15 years ago, Barry Bonds hit the record home run. That's almost like 15 years ago, right? All of a sudden, right? And everybody try to catch the record ball, right? Everybody try to they fall for that ball, you know? You know what? Whenever the guy or girl caught the ball, by that moment, the television caught it, right? Reporter caught it. Anybody take the picture, right? By that moment, oops, you are liable to pay for the tax. That's big deal, you know, because you never know how much value on the ball is. Say $1 million. This is totally from nowhere, from appraisal. And you know what? Let's go behind you, say 1/3. You pay 1/3.
But even you didn't sell the ball.
Well, doesn't matter. When you found the gold part, you have not get the money yet, right? You're liable 1/3. So always after this class, always remember, okay? IRS is your big brother. IRS is your whole life partner, okay? Each dollar you found, they share 1/3. They share 1/3. So every time, you better off consult with your lawyer, consult with me, okay? Come to see me all the time. Come to see me. If that old couple found the gold part, come to see me, they save 1/3. I will not charge 1/3, okay? You keep everything, all right? So every time you have parcel, you don't know what's the consequence, come to see me. As I said, the same movement, the same thing. $1 bill, everybody see, from James to Robert, exactly 100% the same, but the consequence is totally different. Totally different. So that's why you need a professional to give you the advice, you know. Not really we sneak around, you know. This is not really our purpose is to teach people sneak around, you know. Not really sneak around, you know. Because only fool people, you don't know how to talk. Only the fool people, you know, they don't know what's going to talk and they just say the wrong thing. As I say, exactly one action, same action, 100%, 100% they are the same, but the consequence is totally different. Alright? So we have a C corporation, we have an S corporation, okay?
So, on the taxes, what is the advantage from the S corporation and the LLC?
Okay, yes. Really appreciate you, man. Okay. It's very complicated, okay? I can tell you, very complicated. But let me give you one bottom line. The bottom line is, if you have a better thing to choose, I will go with LLC. I will go with LLC because you never know when you may have opportunity to invite non-US citizen become your member. You never know. If you are S corporation, and there's very good chance the people will bring the money in, but they happen to be non-US citizen. Would you give away the chance, or you have to form another business organization to take only to take this new member, right? You never know. So if you don't have better thing to choose, I will always recommend go with LLC. Go with LLC. But there's another reason. Let me tell you. It's kind of complicated, but just give you the basic idea. For a corporation, doesn't matter if it's C or S. By law, you issue stock. You issue stock. Or you call it stock certificate, I don't care. But there is very rigid regulation to define the stock. You need to calculate how many shares in your company, and what's the value of each share, even though it is not public company, okay? As I said, security is a big issue. Even there is the state or federal law to regulate the stock. However, for every corporation, for each corporation, you will issue stock. And you have to, because that is the only legal document to prove how many share interest you have in this corporation. However, there is a very complicated method to calculate what's the value of each stock. Okay, there's so many ways to calculate the value of a stock. Let me give you one very dumb and basic idea. If in the day one, your company only have total $100 cash as capital, and you happen to have 100 equal shareholder, that really means each one contribute $1 into your corporation. And on day one, there's no any other expenses, nothing. At that moment, each person just contribute $1 cash into your account. So you know it's very easy to calculate, right? Each one receive one share and the value is $1. That easy. On the second day, your company spent $10 to purchase whatsoever. Then you need to figure out where is $10 is funded. One way or the other. We will teach this in our summertime. I'll just give you one advertising. Okay. When the day two you spend $10, you need to make a decision. How is $10 funded? One way or the other. Either funded by your capital, $100, or from your creditor. You don't pay this $10 from your capital account. You pay this $10 from your liability account. That really mean, example, you bought $10 copy machine paper, and you negotiate with the vendor, say, I paid you back in 30 days. So even though you purchased, but your capital account still the same. So at that moment, your value of each share still $1. Nothing changed. However, if you pay this $10 from this $100, you know your capital account reduced by 10. So if that really happened, the value of your stock is 90 cents. You just follow the same method. You can calculate the value of the stock almost each minute. You can calculate the real value. That is called book value. That is called book value. For the majority of the private company, that is people how to calculate the value of the stock based on your assets, okay? Based on the true value, book value, to determine the value of your private company stock. So if the value right now is down to 70 cents per share, when the new people coming in, they put the money to purchase your one stock, they only pay 70 cents. But the opposite way, if the business is doing so well and it's $1.50, and the newcomer they pay $1.50. Alright? That is how the corporate operate. And also, not only that, by the end of the year, if the company recognizes the net income, and the corporation, they decided to distribute the dividend. If they pay dividend, they must pay the dividend according to the number of the share. There's no preference. No preference. Good or bad, I don't know. But that's the way you operate your corporation. However, by the same token, we happen in LLC. LLC basically is a partnership. There's no stock. There's no stock. There's only it's called interest. It's called interest. How much percent interest you own. So for accounting purposes, it's much more flexible. For any reason, for this period, as long as they can pass the meeting. Okay? And the majority partners say, oh, okay, for this year, I earned too much money already. I don't want to increase my income. So I would rather let you to take more profit sharing from this year. So the profit and the loss, they can do it not proportionally to the share. That's the beauty of LLC. That's the beauty. Because they don't follow out the share. They don't follow out the share. So that is very important for LLC. So that's the reason why I say if there's no better reason, I would recommend people to choose LLC. Of course, okay, there is a disclaimer, okay? There's a disclaimer, okay? For certain type business, you cannot use LLC. I just could not figure out the reason why. All right? In California, to run your real estate brokerage, you must be a corporation, cannot be LLC. No reason, just policy. Just policy. There's no reason. I believe there's another example like this. For certain type of business, you must run this under certain type of organization. You don't have choice. But other than that, as I say, if there is no any other better reason, that's a better reason because the law requires that. If there is no better reason, I would say LLC.
So if I put the money in the LLC, later on when I spend money, would I be like a taxable for it?
No. Let me go back to James' scenario. Let's just simplify the whole thing, okay? This is your one person LLC or your couple, okay? Your family LLC. There's no any other member. So whatever you say is it, okay? Whatever you say become final, okay? So what happened? You go to Safeway, Range 99, any supermarket. When you purchase your family item, and you use your LLC money to do it. I just could give one example. Because probably you have LLC credit card, and this credit card is supposed to be business, right? And you're supposed to use this business credit card limited to your business transaction. But however, I say this is your one person LLC, this is your family LLC. So whatever you determine become the final. You just do it and nobody change it. So say, example, by the end of the year, after your calculation, you totally use out $1,000 LLC fund spent on your family or personal item. What happened? So does this $1,000 become your personal taxable item? How did you trade this? Number one, I don't recommend that. Don't do that. Okay? That's head up, okay? Because if you abuse, this is abuse. Even though nobody changed it, but if you done this all the time, you're gonna lose your LLC liability protection. In our legal term, we say this is piercing the veil. Piercing the veil of the LLC because you commingle it. Because the whole purpose or the main purpose to do business under the LLC is to protect your personal liability. However, right now you commingle it, you mix together. You don't do the separate accounting, and you use the LLC funds for your personal. Well, even though nobody gonna change it, however, your creditor may be coming in to pierce. And when they file the lawsuit against LLC, they file the lawsuit against you in the meantime. And the theory is, you are the LLC. You are the LLC. It's an alter ego. This is alter ego. Even though there's LLC form, but you are the LLC. Why? There's no any third party. There's no any other additional member that can check and balance. Nobody can say no. And also by your behavior, you done this. So I would say number one, don't do it. But if you do it, what is the tax consequence? What is the tax consequence? Easy. That become reverse, right? Remember I say, when you contribute any assets to LLC, is non-tax, right? Reverse is true. If LLC return any money back to you within the limit you contributed, so totally you contribute $10,000 to LLC. If LLC return the $10,000 back to you, it's also non-taxable. It's more like just return your capital back to you. Under the LLC, totally okay. So that is another beauty of LLC. So go back to our scenario. You just accidentally, not on purpose, you accidentally spend the money of LLC for your personal. As long as the amount is within the money you contribute to the LLC, it is not taxable. It is not dividend. It is nothing. It's just more like return the money to you. That's it. But that is not allowable for corporation. For corporation, each money you spend on the corporation, it must be treated as a salary, as a compensation, or as a dividend. Even the amount still within the money you contribute to the corporation. So that is another big difference. So that's why I say, unless for better reason, you have a much better reason, then you form LLC. So do I answer your questions?
Oh, yeah.
Yeah. So number one, do not use LLC money, okay? Even though you are the person who made the decision, but it's not good practice to do it.
So for LLC, I can take the money back.
You can, legally you can take money back, right? And once you take the money back, oh, by the way, when you take the money back, not necessarily the LLC make profit. There's another beauty. For corporation, there's a limitation. Okay, for corporation, if you take money, the corporate is still losing money, there's big flag, there's a red flag there. But for LLC, nobody cares. Because when you take money back from LLC, it's more like return money back to you. Yes, you can take money back.
If I put a real estate in the LLC, and later on I sell it, how do I calculate how much money at the time I put it in and how much?
Okay, you just keep record. Easy. Let me give you one scenario, okay? We are running out of time. But anyway, let me give you this example, okay? Say for example, the whole purpose is for your LLC, do nothing, just holding the title, right? So, the day you purchase the real property, for example, 300,000, that is the total basis of this real estate. Got it? All right. on the day you transfer this real property to LLC, the value gone out to 500 already. Got it? So when you transfer the property to LLC, your interest of this LLC is 500 market value. That really means if for any reason the LLC return the money back to you, cash or whatsoever, within $500,000, you don't pay any tax. No income tax. However, by the time the LLC sold the property at 800,000, for example, 800,000, the capital gain is 800 deduct 300.
No,
No, of course not. So the LLC recognize $500,000 capital gain, and they issue K1 to you because LLC by itself don't pay tax. All right. So LLC issue K1, one copy mailed to IRS, one copy mailed to you. So when you receive this 500 capital gain, then you will report as your capital gain. And then LLC may dissolve or may stay there.
If there's still value.
Of course.
Oh,
Even there's no value, they still can keep it.
okay.
Right. Even it's totally empty, you still can keep the LLC there.
For real estate, if I stay like 2 years, right, longer than 2 years, I sell it.
For the LLC, family LLC, the good things stay there. You don't lose. Even you transfer your primary residence to LLC, even though the title change, but the good thing is the property tax won't change, and no transfer tax, and you still can enjoy the 2 years, 250,000 capital gain free. So that's beauty. That's a beauty. Yeah. We run out of time. Next time we can talk about a little bit number 5, because I want to talk about a little bit about nonprofit. 501c3, even though it's not very popular, but for some family, it's a good way to set up your family foundation. You receive the 501c3 number from IRS, so every year you can transfer. That really means donate. Okay, you transfer certain amount of money from left pocket to the right pocket, from your personal to 501c organization, and you can fully deduct your donation. So again, this is the philosophy. You lose your ownership, however, you still keep control. You still can manage the funds there. You determine where to spend the funds. So you lose your ownership, you try to reduce your tax liability, however, you still keep your control, your management. So we will spend a little bit time, 2 weeks from the day. So no homework for the day, okay? Enjoy your springtime. Any input so far?
Any downsides for LLC?
Downside, I won't see the downside is every year you need to pay $800 to stay, and you need to prepare your tax, bookkeeping. That's the downside, but this is the part of the life, so you need to do something. So I don't really think this is a downside. Yeah, I think it's affordable, manageable. So good way, at least after this class, you should consider to set up the family LLC. I do this a lot. Every year I do 10, 20 LLC.
How soon can
45 days.
45
45 days.
If you have an LLC and with a partner, and then you move somewhere else, and it's my wife's case. We moved here. She had an LLC with a partner in Arizona, and the LLC is still registered. They haven't done anything. Is there anything that she's just gonna stop reporting K1s from that place, right?
Well, you shouldn't stop reporting. Even there's no any activity, you should still report 000. if you start the reporting, you have 2 years to amend it. I always recommend if there's no any transaction, still report.
Well, the partner is still there with the business. Or-
Well, the partner should issue a K1 to your wife every year. Sure.
Okay, even if it's, oh, okay, okay.
Yeah.
So
If the business is still ongoing,
even if she's not active in the business.
they'll be fine.
she's-
Your wife should receive certain amount of profit, from the LLC. So I would say you would recommend your wife to check with the partner, see what happened. Otherwise, if any liability, your wife may be held up.
Mm.
All right, I will see you in 2 weeks.
Thank you.
Yeah.